Hello and welcome to This Week in Markets. Indian equities had a weak week with the benchmarks extending their correction, the rupee hitting a fresh record low, and crude staying elevated enough to keep inflation and external balance worries alive. The Nifty 50 fell 2.2% for the week while the Sensex dropped 2.7%. Broader markets were weaker too, with the mid-cap index down 2.6% and the small-cap index losing 3.8%. Now let's start with the macro pressure point that kept markets on the edge: oil and the rupee. President Donald Trump, along with a barrage of top US executives, called on Xi Jinping in China. Several deals were signed, and Chinese side reportedly backed US position to not militarize the Strait of Hormuz or introduce a toll system there. Even as Brent crude hovered around $105 a barrel throughout the week until Thursday, it surged over 3% to rise above $109 on Friday amid dampened hopes of any concrete resolution in the West Asia crisis. Secondly, even as Jerome Powell is no more at the helm, as per the latest data available on US-based opinion trading platforms, the odds of US Fed cutting interest rates in 2026 have collapsed to a new low of 27%, while there are higher chances of a Fed rate hike by December. Back home, the rupee continued its downward journey. The USD INR rate hit 96, marking a fresh all-time low, and the rupee has now fallen about 7% in 2026 so far. That weakness was one of the reasons why PM Modi urged caution on foreign exchange use this week, asking for restraint on fuel consumption, imports and discretionary spending to help conserve reserves. Inflation data only added to the concern. India's WPI inflation surged to 8.3% in April, a 42-month high, driven by fuel and power. CPI inflation also edged up 3.48%, still below RBI's 4% target, but enough to show that the price pressure is building again. India also raised fuel prices after a period of nearly 4 years. Both petrol and diesel prices have been hiked by 3 rupees, with experts believing that this may just be the beginning of a staggered increase in the fuel rates if Brent continues to stay above $100 a barrel. There was also a major index event this week, the MSCI May Raging. MSCI added Adani Energy Solutions, Federal Bank, Indian Bank, MCX and NALCO to its global standard index, while Hyundai Motor India, Jubilant Foodworks, Kalyan Jewellers, and RVNL were removed. The changes take effect at the close of May 29, and they matter because they can trigger passive inflows to additions and pressure on deletion. Coming to the fund flow for the full week up to May 15th, FIIs continue to be net sellers of over 13,000 crore rupees, while DIIs injected more than 18,000 crore rupees into the Indian equities. But the broader monthly picture remains stark. FII net selling in May so far is 24,655 crore rupees, while DII buying stands at 39,917 crore rupees. That means domestic institutions are still doing the heavy lifting, even though foreign flows remain under pressure. Sectorally, the weakness was broad-based. Realty was the worst performer, down 7.8%, followed by IT at 5.7%, auto at 4.2%, capital goods at 4.1%, and consumer durables at 3.9%. Healthcare and metal were the only sectors in the green, rising 1.4% and 1.5% respectively. Stock moves were equally sharp. Among Nifty gainers, Adani Enterprises rose 8.4%, ONGC gained 7.2%, Cipla climbed 6.3%. On the losing side, Titan fell 7.5%, Reliance declined 6.9%, and Tech Mahindra lost 6.3%. Next week, markets will track India's April IIP data, the FOMC minutes, and a fresh round of earnings from names like Indian Oil, BPCL, Bharat Electronics, LIC, ITC, Sun Pharma, Hindalco, and Eicher Motors. Technically, the 23,300 to 23,250 zone will act as an immediate support for the Nifty. A sustained move below 23,250 mark could intensify selling pressure and drag the index towards 23,000, followed by 22,800 in the short term. On the upside, the 20-day EMA zone placed near 23,850 to 23,900 is expected to act as a strong hurdle, and only a decisive move above the zone may revive bullish momentum. So the big question now is simple: can domestic flows, earnings, and selective buying continue to offset the pressure from crude, inflation, a weak rupee, and persistent foreign selling? That's all from my side for this week. I'll see you next time. Until then, stay safe and follow Fortune India for all the latest updates from the business world.